Good afternoon, traders. This is Christian from Hertz Market Trade Group, and today is Monday, November 7th, a very warm day too in New York City today. But let's get to the markets very quickly. So, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. You could read the full risk disclaimer here. So, I've got a couple themes of the day, but overall, I thought this was pretty constructive price action for the day. Again, it's kind of the market of the haves and the have-nots. I think a lot of that has to do with a couple of the other theme that I have in here. So let's go first to the U.S. dollar. We'll give the good news first. Good news first, bad news second. Good news is, remember, we saw a big move down in the U.S. dollar on Friday. I think it was down something like 1.7%. That is a good thing. That usually means when the dollar is going down like that, it's a little bit more risk on in terms of what we're looking at in terms of equities. So the dollar moving down and below the 50-day moving average, as well as below the value area for the month, I view that as a positive. However, there was a negative, and that wasn't it wasn't all positives today. Interest rates continue to climb higher, and we're looking at the long end of the curve here. We're looking at 30-year futures, and this is broke the value area for the day, for the month. And if you look at what got rejected here this morning, and this has been the case a lot of times, obviously not every single day, but a lot of times, first thing in the morning, you see bonds up a little bit, like maybe 1/3%, maybe even 0.5%. But by the time you get to the open, there's some sellers in there, and they take it all the way down to flat for the session, and then even more. And you could see that we're down another 80 basis points. So we are now below value for the week, and we are now below value for the month. And your eyes can begin to look at where the lows were reached back on 1024. So this is a headwind for stocks. So dollar moving down, a good thing. The rates going higher like this, a bad thing. And I think if you look at what I just mentioned is kind of the haves and the have-nots, high growth stocks are going to get hit on this because if they're not making money, or if they're making very little money, valuations just have to come down. And I think if you kind of look across the higher growth names, we certainly saw this last week. But software names really got hit last week, even though they were positive. But I still saw a lot of groups that were down today. Tesla continues to go lower. I think the more that Elon spends time on Twitter, which I won't get into in this video, but hopefully he's making Twitter better, and I'm optimistic about that. But we'll see. I'm always optimistic when it comes to somebody new doing something, and then my opinion changes if they screw it up. But anyway, that's all I'll talk about that. But yeah, I mean, Tesla down 5% for the day. Also, if we go back to just looking quickly at sectors in different areas of the market, but solar stocks, which is another expensive group, they were down 1.3% for the day. Interesting, utilities were also down. You don't need to get yield in utilities if that continues to happen. And, some other consumer discretionary was down on the day today. So clean energy stocks down on the day, pot stocks, which is a whole nother situation, but those were your worst performing group, down 4%. So again, a lot of implications when you have interest rates continue to go higher. I have a screen, of course, for the yields, which you could look at really quickly. And you can see right now the 2 years of 4.7, and that's the highest. So you've got inversion there. And when you get to the 20 year right now is 4.5, the 3 years 4.6. But again, this is a big adjustment. And again, I think that's part of the reason why you're seeing, along with the raising of the short-term interest rates, which the Fed does, that is also going to could mean more pain for those areas of the market. So since we're talking about the market and, we'll talk about the S&P, we'll talk about a couple of the other, we'll go through the other indices really quickly, but we are now back above value. Now, again, we could still kind of get rejected in here, right? So far, we're just kind of coming in here, and we really need to kind of retake this level here for the S&P. First things first, 3790. Again, I try to stay objective to all to all possible outcomes here. So that is a possibility, rising back up to the 50-day moving average, that we could get rejected, but you kind of have to wait for that to happen a little bit. You could try to anticipate, but really it's going to be this area that we're going to need to get back above. Notice that we got pretty decently above the 50-day moving average back on 1028. And as well as some things were short-term overbought. So that's really what I'm watching, is 3790 and the 50-day moving average. We could also, if we want to go through these really quickly, also, this I would think is more likely to possibly get rejected. This is the NASDAQ. So notice that this is just coming back into the 5-day moving average, right? 20-day and 50-day moving average way up here. So I think that this, if something is going to get rejected, I think there's a higher chance that this does. And this is something that I will be watching. I'm still short some Qs synthetically through SQQQ. I did not take that. I'm leaving that hedge on for now. And here's where it gets more interesting. Now, IWM did not outperform today. It actually underperformed a little bit, but it's above the 50-day moving average. It's also above the 20-day moving average and above the value area over here. So that's a different looking picture. And then especially what's particularly impressive is the Dow stocks. And again, I've talked about this probably till I'm blue in the face the last couple of weeks, but this is right in the wheelhouse right now of what the market likes. More consistent dividend yielding earnings stream stocks, so I remain somewhat, I mentioned the word optimistic. I remain a little bit optimistic about this market, that some groups can continue to outperform, but then there's going to be other groups that may go ahead and underperform, and that leaves opportunities on the short side as well. So that's not a bad market to trade when you really think about it, having some opportunities on the long side and some opportunities on the short time. So I will go through a couple of the other, a couple of areas that I thought were pretty interesting. Let me just switch screens here for just a second. So I'm going to go through a couple, I like to start with the sectors, right? And I've actually been trading the sectors a little bit more, the sector ETFs, because they're a little bit easier in this market right now. I'm kind of making some adjustments in my trading plan, and I'm trading things like XLE. I've been able to hold XLE a little bit more comfortably, but clearly this has been the standout group. Once again, if you look at the top of the leaderboard, nothing really changing that much. You had OIH, XOP, they continue to really do very well. If you want to add FCG in there too, which is the nat gas ETF, which was strong today too. But those were the two standouts today. Here's what XOP looks like. So again, these things look very strong right now. And again, I try to post several setups. I actually was in one of the setups I took today, but OVV now coming back, out of this consolidation. Another Range Resources, which I actually bailed on this trade at the end of the day. I have XLE on, and that's enough for now. But again, I would call this pretty constructive to kind of go through some of these names and take a look, because there's a lot of them. And really, when you're looking at a sector, you want to see a bunch of different names jumping off the page to you. Chevron, I thought really nice too. It was down a little bit, I think, today, so you had the opportunity to kind of get involved in it. Had a nice trending day. Here's where it opened, and not a huge amount of movement, but again, just moving in the right direction. And if you could find a couple of these trades that you may think are, oh, it's a slower moving name, it's or even if it's an easier trade, find some easy trades that are trending. There's certainly many groups out there. So again, whole energy group continues to be very strong. Schlumberger also made a nice move up to that version point of control. And then, I really liked what's going on, even though this is a very sideways looking chart. I like this little pullback in healthcare. And I took advantage of that, and I went long some XLV. Again, it's not going to be something that moves $5-6, and you can size that appropriately. You could size XLV and some of the sector ETFs a little bit larger because they don't move quite as fast. But take a look at some of the names that are in this ETF, right? Merck is one of those names that had a real strong move, kind of coming back in and digesting some of those gains, and looks like it wants to go back out up and to the right. Gilead was a name that had huge. Gilead hasn't had any sellers since this thing gapped up. Same thing with Bristol Myers, right? Just continues to go up and to the right. And again, what's consistent about these names? Not only energy, but healthcare. Some of them pay dividends. They just have a much more reasonable earning, much more predictive type earnings stream. So again, the market is a little bit more comfortable with these companies right now. Even a J&J looks pretty good, getting above the moving average, coming back in. Moving across groups, very impressive. Boeing still, actually went up and took out this version point of control. But, the industrials have been you've heard me talk about the industrials several times, but, they've been having some nice moves, different pockets of strength within with this group. So it's impressive. Financials have been pretty good too, even though we saw some put buying today. I'm not really sure. A lot of put buying in Bank of America and JP Morgan. So I don't know if that has something to do with the week's events. Keep in mind that we have the CPI report on Thursday. We also have midterm elections tomorrow. So that could cause a little bit of volatility. Other names I'll kind of go over, and this was our watch list that I put together every Sunday, usually Sunday night, for members. But this is off to a very good start. CEIX was also one. Unfortunately, I kind of missed that one right off the bat this morning, but very nice so far to kind of see this on the first day. And again, if you're interested in being a member of Tribeca Trade Group, right? I put this out on Twitter. I'll put it out now with the names because it's not fair to members for me to put this out publicly the day that I give it out. But you could see what names I'm looking for here, right? A semi or two in here, along with some energy exposure, and a lot, a couple of materials names, which they didn't go too well, but a defense name, NOC was one of my favorite setups coming into today, right? Look at it come right into the top of value, right? That's what we want to see. And there's so many names like this that have broken out either on earnings or something else, and digesting and holding quite nice, right? You just have to kind of look for them, and so much better than trying to get involved with these names that are in downtrends, right? Let those names come to you. No need, even like I think Meta was up 6.5%. What are you going to do with that? Up 6.5%. Probably a logical thing to do would be to sell it if you came long into today. This name is going to take a long time to heal, right? As far as what I can tell. Again, I don't have a crystal ball, but cutting jobs, right? They've got a lot of expenditures, so good for them. They decided to cut some jobs. The stock went up on it. I would be a seller into that type of move in a downtrend. All right. Some names to go over too, besides the watch list. So AEHR was on the top of our list. Just to kind of go through the technicals really quickly with this one, this is a fast mover, was up 9% for the day. Even though it was a fast mover, the charts are not a fast mover. The charts have been a slow mover here. Let's see. But this is how we kind of line up, a name that hasn't fully broken out, that may have a little bit overhead resistance. The first hurdle was to get out of value. That was 1993, right? And you got to move up to 2130. Where do I think this thing goes to? Right around 2167 for now, and then it might digest, and we'll have to see what it does there. But it will go up to a level of high volume that it hasn't revisited really in terms of AEHR. BAH, again, a name that probably not that many of you are looking at, but right now with this market, a nice, $2.50 move today, Again, like when I put this together this weekend for this name on the watch list, I was like, hey, maybe this thing, we could get this into the 20-day moving average. The strong names just aren't going to do that. You could see what's going on there. CAH, right? Speaking of healthcare, I didn't cover this in the healthcare setups, but look at how strong this name continues to be, right? And that's also McKesson, and it's also ABC, which reported last week, like these specialty pharma names that are super cheap, right? ABC had a nice move. McKesson, even though it looks like McKesson was down a little bit today, but look at the strength in this name. CPRX, one other healthcare name too. Now this name's going to report earnings, but it was a nice little setup here into the back testing the 50-day moving average and the top of value. I mentioned CEIX already. This made a nice move back above the 50-day moving average, not extended or anything like that. DXCM, which I got long last week, not that big of a, unfortunately, not what I was looking for today, but maybe it continues to go higher. I do have some patience in this name. All right. A couple other names that I'm finding interest, at this point. IT had a gap up and it's kind of just settling in here. Even though overall tech is weak, this is a strong name within the group. Then also the semiconductors. We actually saw some December calls go up today. Interesting, back above the 50-day moving average. Now this isn't a downtrend, so if you're going to play this game of playing stocks or areas of the market in downtrends, you really have to think about where, as always with any trade, where are you going to get out of the position if it continues to go down? I would say if it breaks back into the value area, which is right around 192, I would be out of it, and I would be looking to to get out of this on the for target purposes at 204. Right. Also, Nvidia continues to act very well. This was up 1% to the right now. Again, it's going to have earnings that it's coming up on 11/16. Maybe this comes all the way up and takes out the VPOC up at 152. If that's the case, right, because here's the gap that it has here, right? If it manages to come all the way up here and take out that VPOC prior to earnings, what would I do on earnings? Absolutely nothing. I would not hold this position because it had already made the gains that I was looking for, which is up to 153. And then you kind of have to wait, what they're going to say and what the results are. But if a name does all the dirty work before earnings, that it's such an easier way to go about it than trying to predict what they're actually going to do on their earnings. Maybe it continues to so maybe a buy the rumor, sell the news type trade, because you only have about another $9 for this to get up there. So that's a definite name I would be watching as it goes, as we get closer. SEDG, I think, is up after hours on earnings. The first report that I read said it wasn't so good, but look at it go up to 233, right? So again, the solar group is not a cheap group, right? It's expensive. But notice this ENPH has now filled this earnings gap, right? It might have a rebound in it, right? So again, I would be maybe looking at that for a day trade tomorrow. We'll see. All right. But again, so many of these names, like growth wise, you cannot, like, in my opinion right now, you cannot, first of all, you don't want to chase anything, but especially growth. Trying to trade growth, heavy value, high valuation stocks on a breakout is a recipe for disaster right now in this market. You have to wait for dips if you like growth names, and in my opinion, the name still has to be in a downtrend. The name still has to be in an uptrend if you're going to consider it for more than a day trade. What else? I think I had one or two other names here. Again, just look at the strength. This is impressing me. I've already talked about energy names, but even look at something like this. This is FLR. They're involved in like the machinery, right? So more, I think, industrial name, but again, just shows you where there's some pockets of strength, right? Reminds me of this name too, which hasn't really had any type of pullback since earnings too, which is Chart Industries. All right. So again, a lot of different areas that you can go to in this market. You just have to be open to it. The one other positive that I would say right now with this correction that you're seeing in both mega cap growth, as well as some of the cyber names and some of the software names, in my opinion, this is all very healthy. we don't, in my opinion, not what you had in terms of a non-healthy market was what you've seen in years past when it was mainly the FANG stocks, and then it got to be some of the second tier growth stocks, the cyber names and so forth, right? Let those cool off and let everybody forget about them for a little while. They could eventually come back, but just not right now, not in this market. But I think it's very healthy to say for this market to do what it's doing without major big cap participating. I think it's a much better market to be honest, than having just those four names, watching those four names so a change of leadership, I think is really good. And I'm excited about that. Even though we only have 2 more months, less than 2 months to go for this year, we're going to have a very interesting market for next year. And I look forward to it. Guys, that's it for tonight. Have a great night. See you tomorrow.